For most of us, our financial situation has changed over the years. We might have started off with a small nest egg, but over the years we have accumulated more and more money. The question is, what do you want to achieve with your money? Do you want to save for a big purchase like a house, a car, or a vacation? Or do you want to put away money for retirement? Whatever your goal, it's important to have a plan for how you'll reach that goal. If you have money, then how should you invest it? The answer is, invest it wisely. This means that you need to consider a few things before investing your money. In this video, we'll talk about how to make the plan, and then we'll walk through a simple way to put the plan into action. 1. Determine your risk tolerance. There are lots of different ways to invest your money. There are lots of different types of investment vehicles out there. The thing that you need to remember is that all of these investments have risks. You don't want to just invest in one type of stock. If you did, you would be risking everything you own. If you have the right strategy, you will reduce your risk while increasing your chances of making money. If you have a clear-cut strategy that you follow, you will increase your chance of making money. You need to look at several factors when you are investing. Some of the factors that you will need to consider include your age, how much time you have to invest, and the amount of money that you have to invest. 2. Determine your investment goals. The first step to investing is to determine your goals. Do you want to have a large amount of money or a smaller amount? Do you want to invest for retirement or for a college fund? Do you want to invest for growth or for safety? You should know what you want to accomplish with your money. That will help you to decide where to put your money. You can invest in bonds, stocks, mutual funds, or any other type of investment. If you want to invest in the stock market, you need to find out which type of stocks you want to buy. You should choose the companies that you think will provide you with the best returns. If you want to invest in bonds, you should choose the safest ones. 3. Determine your time horizon. When you're looking at your financial goals, it's important to think about how long you plan to invest. When it comes to investing, there are 3 types of investors: short-term, mid-term, and long-term. Short-term investors are those who need to see a return on their investment within a short period of time, usually a year or less. Mid-term investors are those who need to see a return on their investment within a longer period of time, usually between 1 and 5 years. Long-term investors are those who need to see a return on their investment over a longer period of time, usually more than 5 years. There are pros and cons to each type of investor. 4. Determine your investment philosophy. Are you a conservative investor or a risk taker? Are you a value investor or a growth investor? Are you a long-term investor or a short-term investor? Determine the type of investment strategy that works best for you. This will help you to plan your investments. You should choose an investment strategy that is compatible with your personal investment philosophy. There are many different investment philosophies out there, but the most important thing is to find the right one for you. You should consider your risk tolerance before you start investing. Also, you need to determine whether you want to invest in stocks or bonds. Stocks are risky, but they can also be very profitable. Bonds are safe and reliable. You should pick the best one for you based on your risk tolerance and what you want to achieve with your investments. 5. Determine your risk appetite. Before investment, determine your risk appetite. Risk appetite is the ability to tolerate risk. It is the level of comfort you have with taking more risks than others. Risk appetite is an important part of financial planning. It is defined as how much risk you are willing to take on a particular investment. Risk appetite is determined by your tolerance for risk and the amount of risk you are comfortable with. The higher your risk tolerance, the more likely you will be to invest in high-risk investments like stocks and bonds. The lower your risk tolerance, the less likely you will be to invest in high-risk investments. 6. Determine your investment strategy. Do you want to invest for growth or for safety? Do you want to invest for retirement or for college? Do you want to invest in stocks, bonds, or mutual funds? Do you want to invest in real estate or collectibles? It's important to know what you want to achieve with your investments. Then you can choose the best way to invest your money. You should choose a strategy that fits your needs. For example, if you want to grow your money, you should choose a growth strategy. If you want to protect your money, you should choose a safe strategy. If you want to retire early, you should choose an investment strategy that will help you to reach that goal. We have discussed how to invest your money wisely as a beginner. Follow these steps to invest your money. For more such videos, do not forget to subscribe to this channel.